Hey everyone, I'm so excited about today's episode, but first want to let you know that this show is made possible by Fortune Builders. I also want to take a minute to invite you guys to an amazing opportunity to learn from some of the top experts in the real estate industry about how to get started in real estate or scale an existing business to the next level. Fortune Builders is hosting a one-day webinar to help you learn about real estate investing in today's market. So throughout the show, if you feel like you're ready to get started, go to FortuneBuildersShow.com to register. Again, that's FortuneBuildersShow.com to register. If you're watching on YouTube or Facebook, you'll find a link right below the show so you can get there that way as well. And please remember that the content of this show and every show is for educational purposes only. Myself or our guests are not going to be providing any legal, financial, or professional advice. If we share specific results, they are attributed to an individual or a business, and we can't guarantee the results will happen for you, those earnings or the income will match those figures. The bottom line is there's always risk when investing in real estate. You can make a lot of money or you can lose a lot of money, and it's hard work. But that doesn't mean we can't have fun doing it. So let's get into today's episode.
From a team that has $1 billion in real estate investment experience. A show to help you learn the strategies and systems it takes to get started investing in real estate. This is the Fortune Builders Real Estate Investing Show.
Hey everyone, welcome to this week's episode of the Fortune Builders Real Estate Investing Show. Jeff Rutkowski here, coming to you on the road. Excited to get into a solo episode today, talking about one of my favorite topics in real estate, and that is wholesaling. Now, you might be thinking, man, I've heard that before. The market's so competitive right now. That doesn't work. Well, I'm out to prove you wrong today. So stick with me, and I think you're going to be just as excited about this way of making money in real estate as I am. Before we get into it, though, the word of the week this week, actually, let's make it relevant to our topic here, and that's reverse wholesaling. A lot of people like to make this sound all complicated and fancy, but it's very, very simple. It's just simply starting with the end in mind, starting with your buyer, starting with your rehabber, starting with your buy and hold investor, finding out what type of properties they want, where they want them, and then target your marketing in those areas. Pretty simple, pretty easy, but many people don't take this approach, and I don't understand why. But let's get into today's episode. It's going to be awesome. All right. So as I said, guys, excited about today's episode. Going to get into the topic of reverse wholesaling, and which is pretty cool, and just give a couple of tips and tricks that are working for me in today's market. But actually, before we get into that, though, let's talk a little bit about today's market. Things are interesting, to say the least. I hear a lot of people saying the market's crazy. I don't necessarily like that terminology. To me, I mean, the market's always the market. The market's always doing something different, and it's our job as real estate investors and real estate professionals to kind of stay on top, of what is happening. But I have a saying. It's very simple, but data doesn't lie. Data tells the truth. So you listen to a lot of things, and I encourage you. This is something that is really important right now, in my opinion. Whenever you're making investment decisions, whenever you're looking into new markets, or maybe expanding into different markets, or just pulling back, making all these decisions, it is imperative to track the data. Let me give you an example of kind of what's in my head and why I'm saying this. Is I was talking with an agent the other day on this piece of property that I was interested in. And, the agent basically was saying, man, the market's slowing down, the market's shifting. Inventory has tripled over the last 30 days. And they're actually, a realtor is actually encouraging me to actually go in lower on this specific offer versus what I had in mind. But let's take a step back. Inventory tripling, what does that mean? Well, what did it triple to? And this particular scenario, this particular zip code, The month prior, so let's see, we're in so June data. I haven't received that yet, so this would have been May data. So in April, we had a half a month's inventory in this zip code, a half a month. Now, guys, I've said it many times on the show that 6 to 7 months of inventory is a healthy, balanced market. More than 7 months is a buyer's market. Less than 6 months is a seller's market. So from April to May, it tripled from a half a month to 1.5 months inventory. So that, that's, I guess if you look at it, that's a big increase in 1 month for sure. So I'm definitely going to be paying close attention to the trend and where this is going. But man, that is still low inventory. But Jeff, interest rates have gone up so much. And you're right, they actually have increased. It's still historically low though. 5-6% money is cheap money in my opinion. And at the end of the day, guys, interest rates is just a line item. When you're evaluating properties, whether you're looking to wholesale, rehab, buy and hold, we factor in the cost of money, as you've heard myself, JD, talk about many times on this show. In FortuneBuilders, we use a tool called the Deal Analyzer for flips if we're wholesaling or rehabbing, or we have a very fancy name for our buy and hold analyzer. It's called the Buy and Hold Analyzer. But the bottom line is, whatever you're factoring these deals, whatever the current cost of money is, that's what you plug in. And if the deal makes sense, whether it's 6% money, 3%, 10% money, the deal either, factors out or it doesn't. So yeah, interest rates just yesterday or just last week actually went down 11 basis points for the first time. So we're, I think 5.1 on a 30-year as of just a day or two ago. So we have these different things factoring, but yes, I do agree there is a shifting happening in a market. But the bottom line is, I truly believe with all my heart, and I say this all the time, it is always a good time to buy real estate. Always a good time. Now, the market's always going to do different things, but as Paul Sagan always teaches us, it's not what the market's doing that is important. It's what we are doing in the market. Now, there's certain adjustments that should be made. I'm primarily a cash flow investor. I want to buy and hold properties, from single family to multifamily apartment buildings to just parking money and, other people's syndications. And the bottom line is the worst case scenario is if I'm evaluating something today, and I go under contract. For instance, I just picked up a condo in Virginia Beach, last week, and that's going to cash flow me about $700 a month. Now, if what I paid for that property, if the value of that, let's just say I'm completely wrong about where I believe the market is going, and I don't see us in a bubble that's going to pop, and I don't see this as a repeat of 2008. But let's say I'm completely wrong, and I bought this condo for $500,000, let's say, and then 2 weeks from now it drops to $300,000. As long as I'm buying with fixed debt, then I locked in that $750 a month in this example. So the cash flow is not going to change, even if the value of the asset does, if that makes sense. So to me, the biggest piece of advice I could give, buy and hold investors, listening today is, if it hits your target cash flow, just make sure you're purchasing with fixed debt. I'd be nervous getting into something with a variable rate mortgage that, kind of fluctuates with the, with the current market. So we have fixed debt locked in 10 years, 7-10 years minimum. I'd say you are golden. You are good to go. And one other opportunity, I'm getting off topic here, but just throwing out some things that, I'm just areas that I'm seeing a lot of opportunity in is I do think, a recession is coming. One thing to know, however, since 1980, we've had 6 recessions and the market has appreciated during 5 of them. Only in 2008 did the value of real estate decrease. And that was, really in my mind, an anomaly. It's not what we're facing today. But recession is going to impact, the average person. We've talked a lot on the show about inflation and the cost of all goods and services, including real estate, continuing to rise. And that's not something that our country seems to be able to get a handle on right now. And for us real estate investors that own assets, that's I don't, I feel bad for the people that it's hurting. I mean, it affects me too, and I'm filling up at the gas tank and things like that. But in terms of, the real estate that I owned, it's increased my net worth dramatically, just because the value of those assets keep going up. What could be charged in rent, keeps going up. But anyways, the reason why I bring up this point is, the average person right now that doesn't own assets, that works a 9 to 5, is hurt in a different way. People that are saving money right now are going to be hurt the most, in my opinion. I mean, inflation, they tell us, is one of 8.6%, I believe, is the last number they quoted. By the way, it's higher than that, but let's just say that's accurate. Is so really, in simple terms, we need to be able to grow our money at 8.6 or above to be increasing the value of our money. But what I've found, though, is many people that have been laid off, many people that are, just struggling, to make ends meet, that own properties, have a lot of equity in those properties. I was actually dealing with a friend of mine the other day. I'm trying to help him out, and he's got about $1 million in equity in his home that he can't get out of it. Just for, really just lack of knowledge and lack of education. Now I'm coming in to help him. We're going to make that work for him. He's got a really good first position mortgage in place. I think it was like 2.75. So we're going to, he was wanting, we're looking at the cash out refinance option and realized, man, you got some really good debt here in the first position. Let's find you a second position HELOC, that type of thing. But anyways, as real estate investors, I think it's a huge opportunity for us right now, not just to help people, access cash, because I'm not helping him pull the money out of this house so he could go buy a new Tesla or something. He wants to invest that money, to be able to make more. So it looks like we'll be able to get him locked in, for a HELOC about 4.5%. And, I'll set him up where he could grow that money at 10%. And, so that's going to be another stream of, revenue and income for him. That's going to help him out. But there's a lot of people out there like that, guys, that we can help. And then obviously in return, we could use that funds, to acquire more real estate, to fix and flip more real estate, to double close, wholesale, whatever it is that our business model requires. So anyways, that's my story. I'm sticking to it. Those are just my random thoughts, after this week being out there in the real estate market. But I want to get into reverse wholesaling. And the reason why I wanted to talk about this topic today is I hear a lot of people kind of bashing wholesaling nowadays. Well, it's just too competitive, doesn't work, or, you need to be in a niche specific, like buy subject to, or buy, owner financing, which are great ways of buying property. We buy properties subject to owner financing, all the way, but we don't want to throw the baby out with the bathwater. Wholesaling is still a great way to get started in real estate, and a great tool to have in your tool belt as a real estate investor. And I talk about this all the time. Those of you that are in the Fortune Builders community, maybe you've been to an event with Than and I, where we spent 3 days, talking about this. And by the way, one more tip is this condo I was referencing earlier in Virginia Beach. I actually got that from a wholesaler. So I paid in a wholesaler an assignment fee. I was the buyer. And I found that to be very effective, where over the last couple of years, there's a lot of new investors that have got into real estate, and wholesaling is obviously attractive because you could make money in real estate, and, without having to raise any money or have any of your own money or have good credit or anything like that. But there's a lot of people out there, hustling to find properties. So I encourage you, if you're a rehabber listening to this, if you're a buy and hold investor, get yourself on as many wholesaler buyer lists as possible. I'm probably on literally, like, I don't know, if I had to guess conservative, I'd probably say like 300 lists just all across the country. Obviously, I travel a lot for Fortune Builders and speak and meet a lot of investors across the country. So just ended up on a lot of lists that way. But this is a list I've been on. I've never bought anything from this wholesaler, but this particular property hit my desk. It caught my eye, and just really liked the returns on it. And it's something that he would have loved to buy himself and keep as a cash flowing asset. He just didn't financially have the ability to do that. So, so it was a win-win where I added another cash producing asset to my portfolio. And, he made an assignment fee and he's building up his capital so he could get into the position of, doing different things like that in the future. But reverse wholesaling is a great way to start. And I've said this before, guys, but it's not just for, newbies. It's great for newbies, but not just for newbies. So let me just really just take this episode. I want to run through 4 simple steps to reverse wholesale a property in your market. I don't care what market you're in any of the 50 states across the country. We can make this happen. So step 1, guys, is finding the cash buyers. So can you wholesale to a buyer that is going to get a traditional mortgage? Yes, but it's risky. Too many things that could go wrong. They have to get a proof of the mortgage. They have to do an appraisal. They have to do a home inspection, all of these different things. So if I'm wholesaling you a property, one of the things that I'm going to find out is, basically, are you a cash buyer? I don't care if it's your own cash. I don't care if you have hard money or private money in place, but I want to make sure that you have the cash to perform. Because remember, the whole premise with wholesaling is when you find a property, you're making a promise to a seller that you're going to close on this property in 30 days or less, or 7 days, or whatever you promise them. So I need to know that my buyer has the ability to meet the criteria that I gave to the seller. So we're going to get into that in a moment. But step 1 is, if you're wise, you're going to start with building your buyers list, and then getting to know the buyers on your list and knowing exactly what they're looking for and where they're looking. So then okay, I'm going to target this area with my marketing, whether it's paid marketing or free marketing or, whatever method that you're using. So we know we have buyers there. Now, cash buyers, building your list, guys, is so easy to do. There's so many different ways of doing it, but this is going to be easy. There's so many people out there looking to buy real estate to renovate, looking to buy real estate to buy and hold. They're going to be happy to be on your list as a wholesaler, somebody finding properties for them, really doing the heavy lifting and bringing them an opportunity on a silver platter that they didn't spend a penny for in marketing. It was just, their relationship with you that is bringing them the deal. So I'm always happy. I've been investing for 17 years. I'm always happy to put my information on somebody's buyer's list. And, I have another way of finding property. So what am I looking for in a cash buyer? I'm looking for somebody, like I said, they have the cash, hard money, private money, or, preferably their own cash, can provide a proof of funds on that money, can close in 7 days or sooner, has completed at least, 20 deals of their own already, and is looking to buy at least 1 deal per month. Those would be kind of what I would refer to as like my inner circle buyer list. So when I have a property under contract, I'm going to give it to those buyers first. You don't need a whole lot of buyers to do damage as a real estate wholesaler. You really don't. Really, you have a good list of maybe 5 or 10 buyers that meet that criteria that I just mentioned. You could do some damage and do very well. Now, we always want to build that list bigger, and it will build. We're doing this business the right way. It will grow, over time. But that would be step 1, finding the cash buyers, and many different ways of finding them. I mean, you could find them all online. You could find them on meetups. You could just post an ad on your Facebook accounts and saying, hey, would you like to be added to my buyers list to be the first to know about opportunities in our market, to make money fixing and flipping or buying and holding a property. You'll attract people very easily, doing it that way. It always, every time I tell this story, it makes me think of a buddy of mine, John. And I don't recommend doing what I'm about to tell you, but it was a very creative way, I thought, of building the buyer's list. But have you guys ever, in your market, seen a property? We've all seen them. We're driving around town and there's a property, the grass is overgrown, the house is dilapidated, it's vacant, and nobody, obviously nobody's living in the property and you don't know who's living there, and the property is not listed for sale. Sometimes it can be difficult to find out, who the owner is on that property, and depending on what tools you have or don't have at your disposal. But my buddy couldn't find out who owned this property, so he went and bought himself a bandit sign, one bandit sign. It said "for sale?" question mark, and he put his phone number on it and he stuck it in the front of this person's house. And so his phone starts ringing off the hook because he was a pretty savvy investor, and he couldn't figure out who owned the property or get the contact information, I should say. So the phone started ringing off the hook with a lot of other investors that were thinking the same thing. So he'd be like, "Oh, no, I'm sorry, the property is no longer available, but I'd love to add you to my buyers list, for the next one that come up." So he was building his buyers list that way. Again, I don't recommend that. That's not why he was doing it. He was doing it to find out the owner. And then long story short, he gets a call from the owner who was very, very angry at him, and just started yelling at him for putting a sign in his front yard. And then my buddy, if you know him, you yell at him, he's just going to yell back at you. So that's what he did. He said, "Look, if you didn't make it so difficult to find out who owned this property, I wouldn't have to do this." And long story short, he ended up getting an appointment with this owner and getting the property under contract and rehabbed the property and sold it. So anyways, that's off on a little tangent there, but very easy to build a buyer's list, very easy to, locate buyers. There's software out there, where you could pull data on cash flow buyers in your market. We all know about that. We all have heard of that. So that's an option. So step one is just, guys, start with the end in mind, and then as you meet these buyers, spend a couple minutes, pre-qualify them, and pre-qualify them with those questions. Do you have the cash? Can you close in 7 days? How many deals have you done? How many are you looking to buy on a monthly basis? One question that's also important to ask them is, what is the profit as a rehabber? What is the profit they're looking to make for the deal to be worth their time? So I'll usually phrase it something like this. I'll just say, "Hey, I know we want to all make as much as we can on any given property, but just so I don't waste your time with sending you a deal that's too thin, where do you need to be on your rehab profit for it to be worth your while?" And then when you ask enough buyers this, you'll begin to see a pattern that maybe it's 30 grand, maybe it's 40 grand or something like that. So then when you're evaluating a property and you see, okay, let's just say there's a $50,000 deposit or a potential profit on there for a rehabber, but you also need to get your wholesale profit out of there as well. And you have buyers for days that are happy rehabbing in this neighborhood, in this price point for a $30,000 profit. Then you're showing 50 on your deal analyzer, then potentially you could potentially pull a $20,000 wholesale fee from that property. So anyways, that's just a good way of looking at it, but very simple, guys. Start with the end in mind, find the cash buyers, easiest part of the puzzle. Step number 2 would be finding motivated sellers. And we talk about this all the time on this show. So many ways to find, motivated sellers. When I started in the business, I wouldn't recommend this nowadays because there's so many easier ways of doing it. But when I got started, I would go down to town hall. I would pull a list of, properties that are facing foreclosure or, properties that were in bankruptcy, and I would go door knocking. I'd get a lot of doors shut in my face and things like that. Thankfully, through technology and a lot of software available, we could have that at our fingertips. But yeah, network marketing is fantastic. Bandit signs in some markets will still work for you. Direct mail has been, really tried and true. When you learn how to acquire properties subject to and, owner financing, you could actually approach other wholesalers that don't know how to execute those strategies and ask them for their dead leads. And a lot of those dead leads you can acquire if you know how to, do subject to or, owner financing. And, throw them an assignment fee, for basically going through their garbage, and digging gold out, not really digging gold out of it, but just taking advantage of an opportunity that they weren't educated enough to take advantage of. So obviously I'm not getting into in marketing today, but so many different ways, of finding motivated sellers. But, what works best for me, guys, is really, I love absentee owner lists. I love an absentee owner, if you're not familiar with that term, is for somebody say they own a property in Atlanta, Georgia, but they live in Texas. So they have a rental property or an extra property and they live in another state. Most people don't hire professional management companies to manage their assets. And then they own a property out of state. They're trying to manage it themselves. So they're trying, working with some, low budget local manager that's not very good, or maybe having trouble with tenants, a lot of different headaches that can happen for the average person without good quality management when they own an asset out of state. I love that list. I'm very well with that list over time. I do very well with realtors too. I know on market, working with agents, it's very competitive right now, but when take an agent to lunch, take an agent to coffee, just spend some time with them on the phone, get to know them, let them get to know you. And you really just, you want to do this with as many agents as possible, where you're the one they start sending their pocket listings to. And the whole key, guys, is when that agent sends you the first pocket listing, say like for the first time, they're sending one to you and that deal makes sense for you. You just want to make sure you perform and you perform well, that, you make their lives as easy as possible. Because agents typically are going to bring the deals to the people that they know, make their lives easy. And when they say they're going to buy the property, they're able to back it up by performing. So that's a couple of tips there, but finding the motivated sellers and, there's with the market shifting, with, a recession, very, very likely, there will be a lot more sellers struggling, like I mentioned earlier. But the difference between struggling in 2022 and struggling in 2008 is likely there's going to be equity in the properties. So, learning those strategies like subject to owner financing, just to name a couple of them, are very, very good to know. Just more tools in your tool belt. So step one, guys, find the cash buyers. Step two, find the motivated sellers. And by the way, that's actually a good segue here. I always like, for those of you listening, thinking about getting started in real estate, every single week, Fortune Builders offers a live training. And they actually spend a lot of time getting into the nitty gritty on how to find motivated sellers, whether you have money to invest in marketing or whether you don't. They provide many, many different strategies. And that's really the key piece to the puzzle, guys. To me, the key piece is not raising money to be a real estate investor. We need to learn how to do that, but that's fairly easy once you understand how to do it and where to get it. It always comes back to you're gonna do well in this business if you know how to find deals and get them under contract. And that's really what Fortune Builders focuses on that weekly show. So if you're interested in that, right below this video, if you're watching on Facebook or YouTube, there is always a link to FortuneBuildersShow.com, that'll get you the ticket to the free training. Yeah. And obviously if you're listening, on one of the audio podcasts, type FortuneBuildersShow.com into your URL, and that'll get you there. Most of the trainings are actually done by Than Merrill himself. If you're not familiar with that name, he is the owner of Fortune Builders, owner of CT Homes, owner of Equity Street Capital. He owns, gosh, I think they just passed over $2 billion in commercial real estate under management. And they've flipped over 1,500 properties now with CT Homes. So he knows a little bit, and can definitely help you get to your first or to your next deal. So check out that training. All right. So reverse wholesaling, we got find the cash buyers, we got find the motivated sellers. And then, number three is making an offer and evaluating the property basically. And, those of you in the Fortune Builders community, Than has really got this dialed in for us. Very simple 5-step process that gives you the ability to make offers in about 15 to 30 minutes. And that's really all the time you want to be spending on the average fix and flip, the average wholesale, to get an offer out the door. Right now, we're seeing about 1 out of every 8 to 10 offers being written is a deal. So, let's use the number 10 and say every 9 out of 10 deals are not being accepted. So we don't want to waste a lot of time in evaluation and hours upon hours. So, the 5-step process that we use, and is something else that Than covers in detail in his training, is obviously we start by interviewing the seller. We jump on the phone for 10 minutes with the seller or the agent. If we're dealing with an agent, collect the data that we need. understand what the motivation is for this person to sell the property, understand how the debt on the property is currently structured, and then we move into underwriting that property. And really, to underwrite that property, I mean, four key things, really five, that we're factoring in is we need to dial in that ARV, that after repair value. What's the house going to be worth after it's fixed up? We need to know the repair cost. We need to know the holding costs. We need to know the closing costs, and we need to know our cost of money if we are financing the deal. And then we plug that into our good old deal analyzer, and that tells us what we can or cannot offer for that property. It's really, really that simple. So really just, some of the most important skill sets to understand and really get good education around is, how do I comp a property? How do I determine what that after repair value is? And then how do I get that repair cost without having to get a contractor involved? We love contractors. Contractors are an important part of this business. But if I need to get a contractor out every time I'm evaluating a property just to make an offer, first of all, they're not always going to be available. Second of all, they're not going to be excited to do, 10 times for us with only one going under contract. So, this is where tools like, the repair estimator that we use here come into, just become very valuable. So you can, just through pictures via the internet, and a few minutes, ballpark the repairs on a property. Definitely powerful tool. So once we make the offer, and contracts, I was talking to a new investor. They're not a new investor, but they're thinking about getting started in real estate. And there's how contracts are so overwhelming, they're so confusing. They were just intimidated by contracts. And first of all, one thing to be aware of is, when you're dealing directly with a seller, you don't need to use your state board, contracts. So here in California, our standard contract's like 11 pages, and then there's 5 or 6 pages of addendums. That is a very overwhelming contract. You're working with a real estate agent, you're going to need to use that. But when you're working with sellers, just get your hands on this very simple 2 to 3 page contract. But typically with sellers, I'm just making verbal offers, and I'm just, I live here in California. I buy properties in other states. And typically I'm just making offers over the phone. We're agreeing verbally, and then I fill out the contract and I send it over. So keep it simple. Keep it simple is the easiest strategy there, in my opinion. So that's number 3, make an offer, get it under contract. Once you get a property under contract, you now have you have a non-binding ownership to that property. They call it a contractual interest or an equitable interest in the property. But basically, non-binding ownership is, to me, the best way of looking at it, to where you own that property, you own the rights to buy that property. You don't own the property technically, but you own the rights to buy that property. Nobody else can have the rights to that except for you. So once you place a property under contract, you know how to run your numbers, you have created an asset, you have created something of value. So that wholesaler that I was talking about at the beginning of the show, he found a property in Virginia Beach, actually Newport News to be exact, Newport News, Virginia. And it's funny, I used to live out there. I used to live in Newport News when I joined the Navy. I was stationed out in dry docks in Newport News for 6 months, and then moved over to Norfolk. But this particular condo is like 2 miles from the shipyards where I used to live when I was 18 years old. So, but anyways, so this wholesaler, he found the property, he got it under contract, and then he called me up, and I was willing to pay him an assignment fee to take over that contract, step into his shoes, and then pay the seller what he agreed to pay the seller. So it's really that simple, guys. So this is when you hear people talking about getting started in real estate with no money, no credit, no financials. This is what they're referencing 99.9% of the time. Is really, if you could learn how to become a finder, if you could learn how to become a finder of motivated seller leads, and then learn how to evaluate those properties and quickly get them under contract. That is, in my opinion, one of the most valuable skill sets you can develop in this business. And then you have a line of people like myself waiting to buy those properties from you assuming that you ran your numbers right. That's one of the worst reputations you could get as a wholesaler, by the way, is, if you're sending inflated numbers, or maybe you're not inflating them intentionally, but you're not a good evaluator, and it's really 80 grand in rehab and you're quoting 50, or the ARV is really 250 and you're quoting 275, things like that. So it's important, to really, get good at those two skill sets and not be greedy, not be greedy. That's, get it out there, get it out to your strong buyers, evaluate it, in a fair way, just put it in front of them and let the chips fall where they may. But when you get a good reputation as a wholesaler, that your numbers are true, very, very serious buyers will, when they receive your email, when they receive your message about the property, they will take that seriously. There's certain wholesalers, when I get their emails, sometimes I don't even open them, just because I don't think they've been accurate in 2 years and something they've sent me. But there's other ones, when I see their name like this, I know they're the real deal. I know they're good to go. So again, guys, just, if you want something different in your life, you have to do something different. I believe real estate is the greatest way to create wealth in the United States of America, really on this planet. I say it all the time, but over 18 million millionaires in our country, with 75% of them creating their wealth through real estate. So, very likely we are moving into a recession, into really stagflation, I think is more accurate of where we're headed. And that just means, we're moving into a stagnant economy, but you're still going to continue to see, inflation. All right, so we're really moving into more of stagflation. I think that's more accurate, and really that's just, we move into with a period of time where the economy is stagnant, but there's continued inflation. And I do think home prices are going to continue to rise. I know in some markets, people are reporting it's softening up, and prices are dropping. I invest in about 10 different markets. I'm not seeing it yet in any of those 10, certainly not here in Southern California where I live. But we are moving into different times. So definitely important to always have our hand on the pulse of what's happening in the market. But that is it for today, folks. Just wanted to share with you something, just because, like I said, I've heard a lot of, people out there kind of beating up on wholesaling, and, as not an effective strategy. I'm just thinking, my gosh, it's just, to me, it's one of those tried and true pillars, that has been, all the, in my business from the very beginning up until most recently, securing that property just a week ago. But again, if you're interested in getting started with real estate, no better place to learn than Fortune Builders. I'm not just saying that because I host their show. I'm saying that because I'm a product of the product, started as a student, and has changed my life. So I encourage you, jump in, get yourself educated, and get out there and start buying properties. Appreciate you guys tuning in. Like us, subscribe, share us with a friend, and we'll see you next week on the Fortune Builders Real Estate Investing Show. Thanks, guys. Take care.